Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Happy Thursday to you. I hope you're having a fantastic day. Bitcoin 70,700. Ooh boy, how the strong have fallen. Just kidding. We're hardly out of the races yet. But this is to be expected, as we talked about yesterday. What looked like happened. This is interesting. We get these little fake outs all the time. This is par for the course, but you get kind of used to it. So we had this little descending triangle, right, where the price action was probably, I mean, it was basically supposed to break down from here. That's generally how it works. However, it didn't. It peaks up here, gets a bunch of late longs to get in, performs in a bullish type of pennant pattern, or I guess you could argue that that was just a triangle pattern. However you look at it, the whole point is that when it works itself into a descending trend, it breaks up here and then fakes the hell out of everybody else. So it's an interesting thing, the way that the market's been moving. But the key takeaway here is we lost our local point of control. 72,300 is that rough estimate for that resistance level for us now. So the price does end up coming back up. It would seem sensible from 71.8 to 72.3 as a logical resistance range for us now. Okay, and again, that's just the local range. It doesn't mean the price is going to run to the ground, but the truth is, majority of this fair value gap has been filled, and generally a favorable sign. We're also looking for a consideration, or at least a couple of days ago, it's like, oh, we want 70,000. I'm sure there's going to be a lot of people taking longs in the 70K range. So just be careful doing that. I don't think it's a good play to trade with leverage today in general, just based on the way that things are moving here. It does look like we keep retesting this lower level, and I think further downside should be expected, but we don't want to naively just think that because we are pulling back for a short while. We want to kind of be logical here and omit emotion and just not be an emotional idiot and make sure we have a good time doing so. So I want to say thank you for watching. Hit the comment. No, you don't hit the comment button. Hit the like button. Comment below if you get a chance. Love to hear your thoughts, and I deeply appreciate just the amazing support over the years here for a lot of folks. And if you've been new to the channel or you are new, welcome aboard. Love to hear what you have to say if you want to go ahead and consider commenting. So what we want to do here, though, is look at liquidation levels. This isn't super telling, but it does indicate that we have some longs here, some late longs, specifically with leveraged amounts between 69,000 and 70,500. While that's just kind of generic and easy to understand, that obviously people are going to take longs with stop losses and or liquidation events below the price. You see here, 69,700, 69.8 is that heavy concentration of liquidation. So that's just a very standard thing. Most people, including myself, depending on the kind of trade I'm taking, I wouldn't take this high leverage trade, but just say, for example, I took a long with Bitcoin, I would have a stop loss just below a key level support, which for right now is tentatively 70,000, okay? Very much tentative on that. There's other specific levels, but I want you to just kind of know that large round numbers have a tendency of working as support and resistances. We saw the same thing with 50,000, 60,000. 70 should perform similarly, at least initially. Either way, we broke straight through it on the upside, so it really doesn't, it doesn't indicate too much yet, but just know that's probably a strong likelihood. What is a nice likelihood here too, and this is the reason why we left our shorts open. Future reference, if you're not familiar, I have a Trading Academy community and signals group. We took 20% on a short from 73,000 to 71.4. That was yesterday for a Bitcoin short. A couple days ago, though, we did have, and we still do have, rather, a couple of shorts open with Solana and Near Protocol. I'm going to adjust those targets here today just to ensure that we can secure and walk away with profit, but generally speaking, those are pretty safe as well. We're significantly in profit, averaging in. And the whole reason I mentioned this, I'm sorry, the sidebar for that, the whole point of bringing that to your attention is because I felt confident taking shorts because liquidation delta is too high for too long. Okay, we were hovering around that $8 billion mark, which is a lot of freaking liquidation when you think about it in the last 5 trading days. So in the last 5 days, people got super heavy with longs. Right now, they're getting a lesson, so to speak. And again, that number has to taper off. It's either the price pulling back or people closing their longs in profit. And what do people do nowadays, folks? They don't close their longs in profit. They're greedy as hell, and they'll keep holding until the trade turns red. Exactly why I try to teach the opposite in my university and my community. Okay, so just friendly advice, secure profits when you can. This market isn't for the weak, nor is it for the greedy. You let the greed to the market makers. We got to play a different game. Anyways, 70,000 here. Look, you take a look at this here. That is running concurrent with that liquidation event at 69,800. So we have the most amount of open interest at 69.8, round number 70,000. Okay. So what's to stop the market makers from wicking down to that little level? just to destroy those little guys and turn right back around as if it never happened. It's likely, okay? Anyways, easy to say now, of course, because the price is already moving, but if you've been watching my channel for a couple of days, you'll know that, 73,000, that previous all-time high, we came within $200 of it. It's a distinct likelihood the price is going to pull back from that area, at least initially. Now, do I expect 60,000, 50,000 from here? Not exactly. I think 60s seems likely now. I mean, we're $500 away from it. But the truth is, you never truly know. So make sure you take some profits when you can. So the daily time frame here, we want to recognize that we are in position here where we're still looking bullish. Okay, there's no other way around it. That's a good and bad thing about the daily time frame. It's a very slow moving average, so to speak. So we can see here, money on inflow index is still low. That's, again, I've told you there's not a lot of strength there. Even though we have more volume flowing in than before, the relevant recent past last 14 days, that's a low average compared to before. So that implies less sustainability of this price action, okay? Again, that's why shorting right now seems to make the most sense. RSI is coming back down to 50, but it's still in that sweet spot. So we could really see a bottom here soon. I'm not proposing we're gonna just run to the ground, but once momentum starts, it does slow. It's hard to slow it down. Either way you look at it here, just buying the dip generally isn't going to make sense. I'm not going to ever recommend doing so because most people buy the dip based on, again, their emotional prowess, not their logical prowess. So make sure you flip that around and stop being a victim in the market. Okay. Anyways, the whole point of this is we lost our ascending trend line here. We're tentatively losing it. We technically haven't closed this candle yet. We're about 9 minutes into, or soon to close in 9 minutes. So what this basically just tells us is we got a pretty significant bearish candle. Now, obviously it's bearish engulfing. It's going to engulf the entire thing. It's filling this fair value gap too, which was on the daily here. So if you see this guy, that's where that came from. I put it on other time frames just to kind of give you a better perspective of it. But that fair value gap is pretty much filled, okay? Now, does it mean the price is going to bounce from here? Not necessarily, but it does imply that we might be at our tentative bottom, okay? Because again, those usually get filled at some point or another, as I've been mentioning, and the whole point of understanding that is to set your targets effectively, okay? In other words, if you're going to have a take profit target, right at the upper edge of that 70,500 mark would have been a good place to do it. I think our take profit target is 70,400, and I think we're still likely to hit that for our Bitcoin short for our second take profit target. Okay, anyways, the whole point of all this is to clarify and specify that we are now below the ascending trend line, okay? We've lost our ascending trend. Basically just implying it doesn't mean the price goes like this. It just tells us that we got to be more mindful and pay more attention and not be just an idiot that says, I want to take this coin to the moon, right? Now, Bitcoin's really good at faking people out and switching things around. So as soon as you go bearish, they're going to turn it around on you. That happens. This is exactly why you don't use high leverage though too, because we have low leverage trades for our Solana and Near protocol trades, for example. They're both in heavy profit right now. And the main reason why is because we use low leverage. We were surviving the ebbs and flows. The price of Bitcoin shot up. Most altcoins did too. I wasn't worried, okay? And you shouldn't be either if you're using the right kind of risk tolerance. Okay, so the 20-day SMA, that's about the price action, generally construed as losing a support, if you will, or a trend, okay? And then we take a look here, RSI, this is where things get interesting. If we close at this level, there's a strong chance we're going to be losing 50 on the RSI, essentially implying that we've lost support. Okay, now is that support you could argue is 70,550. That's at 0.382 fib level. But the truth is, all fibs aside, it makes more sense for Bitcoin to retest that 70K mark to sweep this lower level of liquidation and to essentially keep the price moving. Let's take a quick look here, as a matter of fact, at the last 12 hours just to double check and confirm, because this is just kind of letting us know where people are the most heavy. And we can see in the last 5 or 6 hours, there's a lot of people taking high leverage longs with 69,800 as that stop loss and or liquidation event. Okay, this implies these are medium to high leverage trades, because low leverage trades are all the way down here. They don't care about it, right? They got a stop loss at 64,000 or a liquidation event there, and they are not worried. And the truth is, I'd prefer to trade that way. That's just my trading style. Anyways, everything here is bearish minus some moving averages being below the price. So the 50-day SMA is right there at 68.9. that implies that 69,000 is on the table for a potential retracement, especially if we're to pull back to this golden pocket, that 0.618 fib level. So if you're going to consider a long and the price comes down to that range, that would be a solid consideration for the moment, just based on this natural retracement scenario. Either way, let's look at the 4 hour. Sorry, we just did that. Let's look at the hourly and clarify a few things. This is reaffirming bearish divergence, folks. And let me explain. If you've seen my Ichimoku cloud video, you'll know that there's 3 components to this indicator. Again, it's just a really simple, easy indicator to use, and it really helps you understand short-term corrections. So with us having lost the lagging span, basically this is no longer within the price action. It's free and clear. That lets us know we got, it's basically a window of opportunity here. We've got good 24 to 48 hours before that connects. And if that were to happen, then we want to consider closing our short, right? Because we're losing momentum. So that tells us that. The conversion line, the baseline, is also a momentous indicator telling us that, hey, we are shifting from bullish to bearish. We've been there for a few hours. Same thing here as well with the cloud. It's a series of moving averages, very concurrent in a lot of ways with SMAs in the 4 hour time frame, such as a 20-day SMA we just looked at. Being below that price action is generally disadvantageous. So once you break free from the lower lead, oftentimes you'll see a bearish back test. So we could very well see a rally up to 71.7, possibly even 71 even, with the price action continuing lower. It's not a guarantee it's going to continue lower. It just implies that it's not safe to take a long. That's what it does. That's what it's telling us. So to everyone else who is promoting you to take a long because they're a babbling idiot and they probably don't know very much about trading, I would recommend not listening to them in this case. Once again, I'm totally wrong all the time. Okay, not all the time, but there's times when I'm wrong, right? I'll recommend not to take a long and the price just shoots up. But the reason why I do that is to tell you how it is, right? You shouldn't take a long responsibly right now. That's what it boils down to. So I feel good. I sleep good at night every night, knowing that I'm recommending best practice, regardless if I'm wrong or not. Okay. So that's the whole point of this. So if you see this type of behavior, it's very irresponsible to take a long in the face of danger, right? Again, just the statistical probabilities are lower that the price is going to go up and or break through those resistances. So I'll post a playout chart here shortly, kind of let you know where we're at. Again, we got this point of control at 72.3. We got a tentative resistance likely to reinforce itself as a resistance at 71.7. That is a macro daily candlestick closure resistance level. And we've got 70,000 here, which honestly didn't hold very much like a champion before as a resistance. What's to hold it as a support moving forward, right? Especially with market makers coming in here with all this juicy blubber, if you will, with liquidation being too high. So again, just some things, some food for thought. I hope the price goes up and you do well on your longs. Trust me, I get that. But at this point, it makes very little sense to take a long into this until we see an established bottom and or some support, some kind of confirmation. But most indicators are breaking bearish, and we got to respect that. Okay, cool. So that's what we got. I'll update our playout chart, post on Twitter, Telegram, and Discord. If you're not familiar, it looks a little something like this. This was my anticipation from yesterday. Again, I just kind of give you heads up on what I'm planning to do. And again, 8 billion in delta for liquidation longs. That's way too high. Last but not least, too, Bitunix is going to be offering it's a trading competition next month. So if you use my link to register previously, you're automatically eligible. If not, make sure you use the link down below for that. We're currently running a campaign for a deposit bonus, but that's going to be done here in a couple of hours. So don't worry if, actually it is already done because I forgot. It's already the end of the month in Dubai. So anyways, I hope you all have a good rest of your day. Thanks again so much for your time. Check it out. If you have questions, reach out. I look forward to work with you. Have a good day. Take care.